banging on this resistance. You can see the resistance very easily over here. I love that we hit it here. We consolidated. We hit it here again. And then it looks like we're trying to break out. So
hello and welcome to the Daily Crypto. Gareth Soloway has joined us to talk about inflation reduction and the impact it will have on Bitcoin. He makes some very interesting predictions which you don't want to miss out on, so make sure to watch the full video.
no, I'm still in that same camp. I mean, in the very minimum, I think 25.5, I still have about an 80% probability that we'll get to that level. And if we just take a look at the chart, you can see we've just been meandering in this beautiful kind of consolidation phase, right? So it is a bearish channel. I mean, let's be clear on that, but that doesn't mean we can't go up a little bit. And if you look now, the high end of the channel is crossing right at that pink trend line, which is actually that 25.5 pivot low from the Terra Luna collapse. So it makes a lot of sense to me that we should see one more push up right into that level. And then the question is, can it break that? And that's going to be the tougher scenario for Bitcoin to get through that 25.5. And then if we, again, and I think we'll look at Ethereum in a little bit, but Ethereum, like you said, is bouncing around this level of resistance. But I do think there's a chance that you could get up to that next one right around 2,000 if Bitcoin can make that next move up. So I think for the most part, I'm still neutral to positive. I think that you have a Fed that's on hold. You're likely going to see a reduction in or inflation numbers are going to come down. We've seen commodities really come down substantially over the last couple months. You have to think that's going to filter through to the CPI data this week. And I think that gives the market that ability to have a little bit more risk on before we see maybe some downside in the next few months.
Gareth is still positive that Bitcoin will touch the 25K mark at the very least before dumping down to 12K because it's a bearish channel. He says there is an 80% chance that we will see this happening, and he is still bullish on Bitcoin in the short term.
I think it would create a big sell-off. I think you get a risk-off trade in both the equity markets as well as the crypto markets. And again, the idea is we already got a stronger than expected jobs number. If you couple that with higher inflation again, the markets are going to say, oh my goodness, the Fed has to do 75 basis points in September. And who knows if they can even stop going into the midterm elections at that rate.
Right.
So I would be very surprised if that happened. But if it did happen, you're looking at a big sell-off, especially because the equity markets and even Bitcoin have rallied over the last couple months, especially since the last Fed meeting when the Fed was much more dovish, right?
Right.
So that alone kind of is building in the fact the markets have been building in this idea that those CPI numbers are coming down. If that doesn't happen, watch out below.
In the very unlikely scenario of the Fed increasing interest rates to 75 basis points, Gareth believes we will see a huge sell-off in all risk assets because of rising inflation and unusually high number of jobs. However, in case the Fed reduces CPI numbers, here's what might happen.
Yeah, I think that might be the catalyst to push us to that 25.5 level. So I wouldn't be surprised if the initial reaction is people's kind of breathing a sigh of relief saying, okay, we're past this nasty storm. I mean, granted, it's still inflation, right? So it's not like inflation's negative or down to zero, but at least we're not seeing higher numbers. And I agree with you, the lagging indicator of jobs. I mean, I'm sure you've talked about this, but like every day I see a new big mega company reporting new layoffs. And so even though we had a strong jobs number, at some point, all these companies laying off people, it's going to filter through. My guess is the next jobs number, we start to see that. And that's one more signal that the Fed probably has to take a slowing approach to raising rates.
If the CPI number is reduced, it will be good for all financial markets and will also act as a catalyst that might take Bitcoin to at least 25K, if not higher.
That you have this period where the idea is maybe the Fed can generate a soft landing, and that's giving these asset prices. We're seeing the stock market having quite a monster rally off of its recent lows. Bitcoin hasn't had a monster move, but if you look at Ethereum's had a huge move off of the lows as well. So, I mean, the idea is the soft landing keeps us from going into recession. It keeps the Fed from really tightening too much more. But if you get this scenario, and this is what I think is going to happen, is I think you're going to see an economy that slips into a recession, then a worse recession, and the Fed, again, the inability initially to save the markets is by printing money like they have in past recessions is going to be very, very problematic, and it's likely going to trigger a domino effect into a worse recession. Now, at some point during this worst recession, probably in 2023, you're going to see the Fed say, oh my goodness, unemployment is now at 10%. With a recession, you usually see a reduction in inflation. Maybe inflation's come back to 4%. And they're going to say 10% unemployment, we have to start printing again, or at least lowering interest rates to stimulate growth and get some of these people off of unemployment. And that's going to be, to me, that is where you see the pivot in Bitcoin from a risk on or risk on asset to actually becoming more like that gold and starting to take off in those printing money periods.
Gareth believes that sooner or later the economy is going into a recession, and the Fed will start printing more money in order to sustain the markets. This, however, will likely take the economy into an even worse recession.
I'm going to play the conservative side, and I think Bitcoin is the play here. Ethereum's already over 100% off of its lows, and I think, again, Ethereum has that higher beta where in market bounces it's going to do more, but then in market bear markets it's going to lose a lot more as well. And because I still think we have that leg down, I think if you had to choose one, you want Bitcoin because, again, it has the stability, it has relative stability to Ethereum. Now, longer term, that's the better question, right? I think that, again, you'd probably want some exposure in both. So you cover both bases. You have the use case of Ethereum and the Ethereum network, and then kind of the digital gold where a lot of institutional money will flow into the Bitcoin, Bitcoin investments. So I think in longer term, I like both of them. I think I would generally say to people to be careful with other cryptocurrencies because, we see, if you look back 2 years ago, a lot of the ones that were in the top 20 are no longer in the top 20 of market cap. So there are ones that are replacing, like Solana wasn't around that long ago. Avalanche wasn't around that long ago. And so there's still a jockeying for what the third and the fourth and the fifth will be, as if you're looking at the blue chips. So I think if you're looking out long term, you don't know yet, but I would stick with Ethereum and Bitcoin as your investments for the longer term right now.
Ethereum, being the more volatile asset, likes to bounce much harder than Bitcoin, but it also dumps harder when Bitcoin drops. According to Gareth, Bitcoin is the better investment for the short term because of its stability, whereas Ethereum could grow significantly more with its network and use cases. However, he does warn that other altcoins are very risky as most of them weren't even there a while ago.
It certainly is very tricky for kind of a retail investor because, again, picking tops and bottoms is extremely hard. It's taken me, I've been a trader for 2 decades now, and it certainly didn't come to me in the first decade. It came to me more in the second one. Now, having said that, I do think that the retail crowd can start to at least look for certain signs that make them feel uncomfortable. And just like you dollar cost average in, there's nothing wrong with dollar cost averaging out in a way where you take a little bit off the table. And what I would say to the retail crowd is, look for signs of mass hysteria. And when you see that, when you see everyone, when you go into the bagel store or the pizza place and you got the guy behind the counter telling you he just got into Dogecoin or he just got in, those are signals that as a trader, you can't get excited by, you actually need to get fearful by. And so again, I'm not saying you necessarily want to say, oh, I'm going to dump my whole position, but what's wrong with taking 25% off when you see those signs and then potentially rebuying at a lower level? So I think dollar cost averaging in is great. And I also think taking a little bit off the table, like I say to all the traders that I trade with, no one went broke taking a profit, right? Worst case, you might not have made as much, but at least you locked some in.
We all know about dollar cost averaging to average out our buying price, but many investors often overlook averaging out. Since no one can predict the exact top or bottom, it's a good practice to slowly offload small portions of your holdings to lock in some profits.
So I would say that this is a time to take a little bit off the table, right? So what you can see is, again, you got down, even down here, it was as low as about just below 900. So you have to look at it. And one of the things as a trader, I make sure to mark myself, it's not what your entry is, it's what the low was. So, your entry might have been 1400, but if it went to 900 or 885, it's now up 100% off of those lows. And you have to say that's a big run in a very short amount of time. Now, having said that, I love the fact that the chart is banging on this resistance. You can see the resistance very easily over here. I love that we hit it here, we consolidated, we hit it here again, and then it looks like we're trying to break out. So taking a little off is a good idea. to me, it still looks like there's a little bit more upside in Ethereum, likely coinciding if we can get to 25.5 or greater on Bitcoin. One of the levels to watch would be 1900. You can see this kind of area right here. And then really, I would even say the even number of 2000 would be your next level. So, let's just say you have a full position on Ethereum. I think you look to take maybe 20% off here, 20% off above 1900, 20% off above 2000, and just kind of cycle out that way. And then maybe just hold your remaining 20 or 40% and just say, I'm going to roll with it just in case we start a new bull market, and then you participate. But we certainly, in all fairness, I'm believing that we're going to start coming into some big resistance and eventually roll over. The last thing I would just note is this would be kind of the most bullish case scenario where I would actually short Ethereum. If Ethereum got a monster move up into this trend line, I would probably pull the trigger on a short in the next couple of weeks.
Gareth is bullish on Ethereum for the short term, as we just saw on his chart. He is going to close 20% of his position at this point and another 20% at the next point of resistance at 1900. Do you agree with Gareth's take on the macro factors? Has Bitcoin already bottomed, or is one last dump yet to occur? We would love to hear you guys, so let us know in the comments. Don't forget to like this video and subscribe to our channel to stay up to date with the latest market news and events. See you guys in the next video.